Hi everybody. I hope everything goes well. Remember this question? Okay, this is the question that you have seen before. Last time, we have discussed about how to answer the first question. Okay, the first question asks you to analyze the business transaction. And then we have done this. Okay, this is the analysis of the business transaction. See? Okay, for this question, you have to know what is the effect of the transaction on asset, liability, and the equity. So this is the analysis for 1st of January, 2nd of January, 3rd of January, 10th of January, and also this is the analysis for the transaction on 17, 29, 28, 24, 28, 29, and 30th, and also 31st of January. So we have done the question A. Now we have to do the question B. The question B asks you to record the transaction in general journal. Okay, so actually the question A is the first step in the accounting cycle, and then the question B is the second step in the accounting cycle. Okay, to answer the question B, you have to know two things. First, to answer the question B, you have to know the format of the general journal. Okay, remember, the general journal, the format for the general journal is like this. The format is like this. First, you have to write the date of the transaction, and then you have to show the debit entry, and then the amount related to the entry, and then you have to show the credit entry and the amount related to the entry. Okay, this is the format of the general journal. You can see this format in the lecture notes that we have discussed before. Okay, the second thing that you have to know when you want to do the general journal entry, you have to know the rule of debit and credit. The rule of debit and credit is like this. Okay, the rule of debit and credit says when there is an increase in asset, you have to debit the asset account. When there is a decrease in asset, you have to credit the asset account. And then it also says that when there is an increase in liability, you have to credit the liability account. When there is a decrease in liability, you have to debit the liability account. And for equity, when there is an increase in equity, you have to credit its account, and when there is a decrease in equity, you have to debit the equity account. Okay, this is the rule of debit and credit. You have to memorize this rule. Okay. So when you know these two things, then you can answer the question D. Okay, let's see. Now we do the question B. Okay, to answer the question B, you don't have to refer to the business transaction anymore. When you want to answer the question B, you refer to the step 1 of the accounting cycle, which is the analysis of the transaction. Okay, see here. So this is the analysis that you have done in question A. Okay, now I'll show you how to do it. Okay, so now the question asks you to prepare or do the general journal entry. So you have seen the format of the general journal, and also you have seen the rule of debit and credit. Okay, just to refresh your memory, debit means left, credit means right. When I say you have to debit an account, it means that you have to record in the left side of the account. When I say you have to credit an account, it means that you have to record in the right side of the account. Okay, now you have to answer the question. Now you do the general journal. Okay, now we do the general journal for the 1st of January transaction. 1st of January. How to do the general journal? Okay, you check the analysis that you have done. See here, when you do the analysis, you say that on the 1st of January, there is an increase in asset cash, 5,000. Then the second thing is, there is an increase in equity related to account capital, also 5,000. So how to do the general journal entry? Okay, remember the format and remember the rule of debit and credit. Now, when there is an increase in asset, you have to debit the account. The account is account cash. So you have to write the date for the general journal, and then you have to show the debit entry. The debit entry is debit account cash. The amount related to this transaction is 5,000. Okay, and then the second thing that you have seen in the analysis is equity increase. The account is capital. The amount is 5,000. So when equity increase, what should you do? The rule of debit and credit says when there is an increase in equity, you have to credit the account. So this is the debit entry. The credit entry is credit account capital. The amount is also 5,000. Okay, this is the way to do the general journal. Very simple. You have to remember the format, and here you have to know the rule of debit and credit. Okay, let's see what is the second thing that we have seen in the analysis. We have to record everything. Every transaction has to be recorded. After you analyze, you record. Okay, and then the second thing that you have analyzed is on the 1st of January. The second thing that happened is asset equipment increased 3,500. Equity, which is related to account capital, also increased by 3,500. So the date is same, 1st of January. So first thing that happened is asset equipment increased 3,500. So what should you do when there is an increase in asset, debit or credit? So you check the rule of debit and credit. when asset increases, you have to debit. So debit account equipment. Debit account equipment. The amount is 3,500. And then here, equity increase. Equity increase, you have to credit. Here, the account is account capital. So, you have to credit account capital. 3,500. These are the journal entries for the transactions that happen on the 1st of January. Okay, now you are done. Okay, so now you have to show the general journal entry for the transaction that happened on the 2nd of January. So you don't have to refer to the transaction. Remember, you have to refer to the analysis only. Okay, so here on the 2nd of January, the analysis shows that there is an increase in asset equipment 2,300, and also there is a decrease in asset cash 2,300. So how to record that in your general journal? Okay, first you have to write the date, 2nd of January, and then see here, asset increase, asset equipment increase 2,300. So check the rule of debit and credit. The rule says when there is an increase in asset, you have to debit. And also, when there is a decrease in asset, you have to credit. So you record the debit side first. So debit account equipment, the amount is 2,300. And then cash decrease. Cash decrease, you have to credit. So credit account cash. The amount is 2,300. When you credit an account, you have to show it a bit on the right side. Okay, you cannot write everything like together. For the credit entry, you have to show it a bit on the right side. Okay, that is the first thing that happened on the 2nd of January. And then refer to your analysis again. There is a second thing that happened on the 2nd of January. On the 2nd of January, also there is something here. First, when we analyze the transaction on the 2nd of January, there is a decrease in asset cash, 500. And also, there is an increase in equity, 500, related to account rent expense. So, how to record that in your general journal? Asset decrease, you have to credit. Equity decrease, you have to debit. So the way to record it is like this. The date is same, 2nd of January, and then there is a decrease in equity, you have to debit. So debit account rent expense. The amount is 500. And then there is a decrease in cash. Asset cash decrease. You have to credit account cash. So credit account cash, the amount is 500. Okay. Very straightforward. You have to remember the format of the general journal, and you have to remember the rule of debit and credit. Then you can do this. Okay, let's see what happened on the 3rd of January. Okay, there is a transaction on the 3rd of January. When you analyze the transaction, the effect of the transaction is there is an increase in account supplies, asset supplies, and there is also an increase in liability account payable. The amount is 350. So when there is an increase in asset, you have to debit an account. When there is a decrease, an increase in liability, you have to credit an account. So how to do the general entry? So very straightforward. Asset increase, you debit. So debit account supplies. The amount is 350. And then there is an increase in liability. Liability increase, you have to credit. So credit account payable. The amount is 350. Now, that is for the 3rd of January. On the 10th of January, the analysis shows that asset cash increased 750, and then equity related to account revenue also increased 750. So you straightforward, you know that asset increase, debit account cash, equity increase, credit account revenue. So on the 10th of January, you debit account cash. The amount is 750. You credit account revenue. The amount is 750. See? Okay, so that is the way to do the journal entry. Okay, let's see the next thing. The next thing is transaction from the 17th of January to the 24th of to the 31st of January. So this is 24. Okay, see here, I have prepared the answer. See here, 24th of January, 17th of January, there is an increase in cash and an increase in revenue. So increase in cash, the journal entry is debit account cash. An increase in revenue is an increase in equity, so credit account revenue. Okay, 24th of January, there are two transactions on the 24th of January. The first one is there is an increase in cash, so debit account cash. Increase in revenue, or you have to credit account revenue. The second one is increase in asset account receivable, you have to debit. See, debit account receivable, and then increase in revenue, you have to credit account revenue. On 28th of January, things that happen is a decrease in cash, asset cash, and also a decrease in equity related to utility expense. So asset decrease, you have to credit. Equity decrease, you have to debit. So on the 28th, asset decrease, you credit account cash, and then equity decrease, you debit account related to equity, which is the utilities expense, 275. Okay, now let's see the 29th of January. On the 29th of January, the analysis shows that a decrease in asset cash and a decrease in liability account payable. So cash decrease, you have to credit the account cash. Account payable decrease, you have to debit the account payable. So the journal entry is credit account cash, debit account payable. On the 30th of January, an increase in cash, asset cash, so debit cash, a decrease in account receivable, so credit account receivable. See, 30th of January, debit account cash, credit account receivable. And then there are two transactions happen on the 31st of January. First, cash increase 700. So asset increase, you debit account cash 700. Equity increase, you credit account revenue 700. See here, 31st of January, debit account cash 700, credit account revenue 700. And the second thing that happened on the 31st of January is a decrease in cash 600 and a decrease in equity 600. So cash decrease, you have to credit account cash and then debit account drawing. So debit account drawing and credit account cash decrease. Okay, so this is the answer for the question B. General journal. 1st of January, 2nd of January, 3rd of January, 10th of January, 17th of January, 24th of January, 28th of January, 29th of January, 30th of January, and 31st of January. Okay, this is the answer for the question B. The thing that you can do is you try to answer this question and then you compare your answer with the answer that I shared here. So, and you can ask me if you found any problem, if you face any problem. Okay, thank you very much. Bye bye.